All right, what's good, everyone? Today's video, we're going over power of three, and we're going to be going over real examples in the live markets on how to frame your trades using ICT's power of three. So here we're going to be starting off with a bearish example, and in the power of three, there are three stages, obviously. So we have our first stage, second stage, and third stage, which would look like this. So our first stage, what we have is accumulation, and then our second phase is manipulation, and then our third stage is distribution. Now, the accumulation phase is meant to generate liquidity. The manipulation phase is meant to take out, it says sell side, but it should say buy side, to take out buy side liquidity and then target opposing liquidity in the form of sell side liquidity, which you can find at swing lows. So the distribution leg is what we would use to actually frame our entries on the lower time frames in order to target the draw on liquidity. And now we have a bullish example, and it's really just the same thing. So now we have our consolidation or accumulation phase. We then have our manipulation phase, and then our distribution, which is all three stages. And in this case, we are generating liquidity in the form of sell side liquidity. Our manipulation leg will take out that sell side, and then we're going to use the distribution leg in order to target buy side liquidity. So here we're taking out sell side liquidity, which we accumulated during the accumulation phase, and taking out it during the manipulation phase in order for us to target buy side liquidity in the distribution phase of the power of three. So in order to take advantage of the distribution leg, after we've taken out major liquidity in the form of a liquidity sweep, what we want to see in the lower time frames are potentially inverse fair value gaps or even order blocks or just any PD array that can give you an entry on the lower time frames. So you can time your trades when the distribution leg is occurring. So now that you understand what the power of three is all about, now we can go over to a real live market example. So here we have our accumulation phase. We're generating liquidity in the form of sell side liquidity. We see our manipulation phase where we take out that liquidity, which is sell side liquidity, and then we have a move upward. And you can see there even is a ifvg right there that you can take advantage of. And we have targets above in the form of buy side liquidity. So if we zoom out a little bit, we can see there's one more thing that we should pay attention to. We have a major liquidity pool in the form of equal highs. There's three equal highs, which is a major liquidity pool, which is a great draw on liquidity. If price is distributing higher, this should be where price is supposed to go, given that it is a major liquidity pool. We have three equal highs and we have one more relative equal high. So we can mark that out. Now, in positions where you have these type of liquidity pools, these are areas where you would either take full TP or even go break even just to protect your capital. So we got one more example, and this time we're going to be using a different type of power of three, just in the form of sessions. So we can use this in order to determine what type of price action we can expect during New York AM session, for example. So here we have the accumulation phase in Asia. Asia usually consolidates, so that would be the accumulation stage of the power of three. And then we have London taking out the liquidity of Asia, which manipulates higher. And then we have New York distributing lower, which is a power of three. You can follow us on X or you can find us directly in our Discord.